So I can go live. Do you think you're ready to go live? I mean, you're pretty good on the fly.
Yeah,
All
yeah, we're
right,
good.
cool. So as soon as it
I'm
goes
not
live, I'm
scared.
gonna hop over and put in the groups. Sorry for the delay there. I overbooked. I had committed to Barry back to back, but I wanted to get this. I wanted to get this out there because this is important, man. This is big stuff, and I think some people are definitely overreacting, but I
Yeah,
think I hear stories of people losing deals, and it's like, well, are they overreacting or aren't they? If they're losing deals that they've referred to a Keller Williams agent, that's bad. All right,
yeah,
so I'm
we'll
jumping over
talk
to
about it for sure.
yeah, exactly. So I'm first thing I'm doing is posting it in your group. It's going live in your group right now.
Cool.
Okay, Keller Mortgage. So uh, you can go ahead and start introducing what we're talking about to your group if you want. I'm going to hop over and post it in another group here while you're talking.
Awesome. Let me just post real quick. Sorry for the delays. Hey guys, if you're watching this somewhere somehow, we apologize about the delays. Let's share discussions. Here we go. Team, sorry for the delay. Bottom line, guys, is we're having a hard time sharing to two different groups, to both the Consolidated Coaching Group and also the Mortgage Loan Officer Network. So I think we are all fixed and set and good to go. And yeah, awesome. So we're live in both groups. I'm Scott
Hmm.
Groves from Consolidated Coaching. This is Michael Fisher, obviously, who's hosting. Thank you for inviting me on. And we're going to talk about a bunch of stuff in the market that might be relevant, might not be relevant. Might be people overreacting, might be people shouldn't be overreacting. But I think we're going to talk about that a lot, what's working and what's not, and kind of just our general thoughts. So, Michael, if you want to give us the 30-second Reader Digest about, why you invited me on and what you want to talk about.
Absolutely. So, I think the biggest challenge for many of us is understanding what how the relationship may have changed with the Keller agents that we currently work with. Many of us have invested a lot of time and energy into working with agents that are currently at Keller, and we certainly don't want to perceive ourselves as or display ourselves as negative, and we don't want to go start saying things that are untrue. But we
Right.
want to pay attention to some of the things that they're doing at the corporate level that could potentially affect our relationships and our ability to earn income. And I
Right.
think that's why it's important to at least dive into what's going on and analyze it from a perspective of knowledge, and not just emotion and overreacting. Does that make sense?
Yeah, it totally makes sense. And I know, I to tell you the truth, don't know a ton about Brian Steven. I've seen a few of his videos. I've done some trolling around some of his posts in Facebook. Uh, I do worry that maybe some of what he's doing is self-serving. And I know that you guys are friends, and I would tell this to him if he was on the call. But just because he's doing some stuff that might be self-serving also doesn't mean that he's wrong.
Hmm.
So he very much could be right. It also could be a little self-serving. I know from my understanding, he has some vested interest in a company stake for something that does lead generation for loan officers. And obviously, his thesis is we should be moving more and more towards loan officers controlling the lead, creating their own funnels, creating their own opportunities, and handing those off to the realtors. Obviously, if Keller Williams succeeds in this, then it kind of throws that whole dynamic on its head. So I get what he's saying. I wouldn't ever count out Keller Williams for anything that they're trying to build because they've been pretty damn successful at most of the stuff that they have attempted. But I am a little worried that this is kind of, for lack of a better term, Brian's 15 minutes of fame, that he can get as much traction and more comments on this topic than he's ever gotten on anything else. And maybe we're all overreacting just a bit and the sky's not falling. And most, like vast majority of Keller Williams agents are still going to work with the same people that they've always worked with. So definitely worth talking about. I think our conversation is relevant, but maybe not as concerning as some of us would think it is.
Right. And that's where I think the conversation originally started. Keep in mind, Brian's show is a news show, and sometimes news is positive and sometimes it's negative. And
Right, right.
yes, I've talked with Brian pretty much 2 or 3 times a week on Messenger, call him every here and there. certainly, help him with some of the lead generation stuff, and he helps me a little bit with, hey, Fish, when you're on camera, quit saying and ah and stare at the camera and don't pick your nose as much. Okay, thanks, Brian. I
Right.
appreciate it. But yeah, no, I have a lot of respect for what he does and what he's brought the industry over the last decade. I think one of the points that he's making, it definitely, at least from a philosophical level, it makes sense. And it's the point, like you and I said, this might be a counterpoint. We might disagree a little, but might agree. But hopefully we can at least walk through this and let everybody else make their own decision. But when I look at some of the word choices from Keller Mortgage and the things that they mentioned in their video, which was originally meant for the leaders of the company, but some of the things they say, burn the house down, we're the dog, they're the tail, we wag the tail. That stuff sounds good on stage. At the end of the day, though, that's my question: is Gary Keller really trying to take over the whole mortgage industry, or is he just trying to build ancillary products?
Mm-hmm.
And if it gets to the point where they are a one-stop shop, and certainly when he says things like, if you do not get ready, if you not do this, get ready for a class action lawsuit. What does he mean by that when he says that? A lawsuit against who? From Keller to their agents? I don't know that I understand, even watching some of those videos, where he's going with this. But I know that a lot of the message I saw in the video was telling agents to perhaps devalue themselves, and telling them, hey, well, if you lose a deal, just pick up another one by discounting yourself or discounting mortgages. And that's really what I want to focus on is what kind of value do we have as loan officers for agent partners, and what kind of value should our agent partners have for themselves, whether they work at Keller Williams or anywhere else?
Well, I think his speech at the event, which of course, if I had a camera on me 24/7, I'd probably be fired in jail, have no friends. We all say crazy stuff that sounds a little outlandish. He just happened to be on camera when he said it. I do feel like that speech went a little off the rails and maybe got a little aggressive. And he was brutally honest, which I expect from him and also respect a little bit, where he said, look, this is not going to be popular with a lot of our mortgage partners. If we do this right, which again, I wouldn't count on them to do it wrong. If we do this right, we are going to piss off a fair amount of our mortgage partners, our MSAs, the people that are paying us money to sit in-house. But I think whether it's Keller Williams, whether it's Rocket Mortgage, whether it's Loan Depot and their technology and trying to open MLO and basically do the opposite of what Keller Williams is doing. There's a lot of mortgage companies out there that are trying to create real estate companies, or at least real estate funnels where we control that conversation. I think this is just more and more indicative of where the business is going. Amazon Mortgage, Keller Williams Mortgage, Rocket Mortgage, somebody is going to figure it out, and they're going to figure it out at a very high level. And I think 50% of loan officers in the next 5 years, maybe sooner, will either be completely out of this business because they're going to see a huge disruption to their income. And if they're making $100,000, $120,000 a year and now their income's in half, you're not going to deal with the headache of this business for 50 or 60 grand a year. You're just going to go find something else. So I think half of the people, because of one of these things we're talking about, are going to be out of the industry, or they're going to be a $200 a file shepherd because the government still says you need an NMLS number on every 1003 in order to quote a rate. I think half of us are going to go that way. And I think half of us are going to go the more boutique-y route, kind of like there's H&R Block and there's TurboTax, and there's, accountants that charge $4,500 to file my taxes, which I just paid yesterday. And I think that's the direction of the business. Now, if Keller beats Blend to the punch, or they beat Rocket Mortgage to the punch, or they beat, IMP, which is the software that Finance of America just bought from Skyline, I don't really care who does it, but it's coming. So we should kind of just accept that like half of the clients are going to be able to click a button, pick one from column A, one from column B, and get their Keller Williams mortgage at a super discounted rate, and half the clients are going to have a financial situation so batshit crazy that you're going to have a quality loan officer that can package the deal. And frankly, instead of being scared of it, I'm kind of welcoming it, because I want to see 50% of the loan officers in our business out of business and going back to being used car salesmen and cell phone salesmen and stuff like that, because I think it makes more opportunity for the people that are actually great at their craft. So, I'm worried, but I'm not scared, I guess, if that makes sense.
Yeah, the hangout that I did before this, and one of the reasons I was a couple minutes late, we were talking with Barry Habib, and Barry was talking about so what happened to the stockbrokers and how, that industry consolidated massively, and the folks that remained actually ended up making a lot more money after the consolidation.
Yeah.
But they were also the folks who really truly took their job seriously and positioned themselves as advisors and had that role, and that they really truly knew what they were doing and could educate and partner with their with the folks in their network, and of course their customers, most importantly. So I definitely agree with that, and I think this, if nothing else, is just another reminder to us that if you control your own business and you're building a business, your business has to have more than one spoke to it. It has to have, some people say spokes, some people say pillars, some people say sources. But at the end of the day, if you put all of your business into one Keller Williams office, and that Keller Williams office decides you're no longer the man, what are you going to do?
Yeah, this is good. A little bit about my history and vice versa. This is going to sound a little bit self-serving for me, but also means it's not true. I was a previous loan officer at Movement Mortgage, who I have a ton of respect for that company, the leadership. I still have a lot of friends there. I think they did some great things pioneering, bringing fully underwritten files on every single pre-approval, which I think needed to happen to our industry. So ton of respect for that company. And I preface that because what I'm going to say is maybe a little controversial. If I am Movement Mortgage and we'll just take a market leader, running a geographical area, and I'm stroking a $2,000 check, a $5,000 check, a $15,000 a month check to Keller Williams to be their partner, to really keep those branches afloat because it's off the ancillary services where they make money. And then they're turning around and saying, hey, thank you, Mr. Market Leader, for contributing $50,000 a month to our bottom line here in our 10 market centers that you support. But by the way, we're also using that money to build out a platform which we hope and believe is totally going to replace your value. Now, you and I know that's not true because the professional loan officer is still going to need to be around to structure those deals. And again, this sounds very self-serving because, frankly, I'm recruiting some loan officers that work for Movement Mortgage who are in KW offices, but that doesn't mean I'm wrong. Like, why would you want to sit in an office and pay money to a company who is actively trying to replace you? It's the same conversation I have with realtors who call me and they're like, hey, do you want to co-brand on Zillow? It's like, no. Why would I want to give $1,000 to the entity that's trying to replace you, Mr. and Mrs. Realtor, and trying to replace me with Zillow long forms? It's insanity.
Yeah, I totally agree. And that's, you and I are actually on the same page there. Like, I don't want to take Keller Williams agents that work with me and just tell them I'm done. But how many opportunities can I share with them? I mean, I'm a pre-approved borrower. Do I want to give it to a company who's said outright they're working hard to devalue me and take money out of my pocket and devalue the industry? So, I mean, there's pressure all over the country from Redfin, from Amazon, from Zillow, on the realtors in general. So I think that as an industry, we have to recognize together that the devaluation is not just loan officers, it's real estate agents, it's anything. And it's going to continue with technology. Every industry will sense some pressure from technology. So this is where I think we really need to embrace our real estate agent partners and have the dialogue from the perspective of value. What value do you have, Mr. Agent? What value do I have? How are we going to communicate this value together moving forward?
Yeah, and I think you nailed it on the head. It's at the end of the day, and we've been talking about this a lot in your forum, in the Consolidated Coaching forum, publicly, is, this goes back to one-on-one relationships, selling human to human. It's not business to business, it's not B2B, it's not B2C, it's human to human, doubling down on those relationships and going out and adding more value to those agents so that the Keller Williams mortgage disclosure becomes one of the other 200 BS digital disclosures that every client has to sign, and there's no chance they're just happening to stop on disclosure 97 and really digging into it and ditching us for Keller Williams mortgage. So, like anything, it's about how much value we can add to the realtor partner and make their business better, make our business better. And then just having an honest conversation with them, like, hey, it's cool. Are you going to refer business over to Keller Mortgage? That's fine. You have to make a business decision. And then, I have to make a business decision. no hard feelings. We can still go watch boxing matches together. We can, we can split the bill at happy hour from now on. And you're not going to hurt my feelings. Let's just have an adult conversation. I value you as a referral source. Hopefully you value me as a business professional. And let's talk about what that looks like. I really feel the people that are freaking out the most are the ones who are either scared to have that business conversation because they're not adding enough value to their referral partners, or if I'm being honest, they're preloading the excuses for when their business doesn't look as good as they would like it to over the next 6, 12, 24 months. I see that a lot when I'm doing manager meetings with lower producer loan officers, is there's always something going on with the market or technology or Trump or something. And I'm like, all right, let's call a spade a spade. You're bullshitting and you're basically just preloading your excuses for the next 6 months. Like, I don't give a shit about Trump or Rocket or whatever. Like, there's business to be had and we can all go get it. So that's my 2 cents on that.
Absolutely. So if you're going to go through this in an organized fashion, I guess step one is to figure out what your value is, right? Or would step one be to asking the agent what their value is? I mean, how would you approach it? Would you talk to the agent first about your value, or would you ask them perhaps about what they think their value is?
The first thing I do is ask them if they've even heard about Keller Williams Mortgage, because if I read the stats right, they've only rolled out to about 20 market centers, and there's several thousand of them nationwide. And so the first thing I would ask is like, hey, have you heard about Keller Williams Mortgage? Seems like kind of gimmicky. And that's probably the end of the conversation with most Keller Williams agents, because they're going to be like, nah, I don't really care about it, haven't heard about it, or yeah, totally gimmicky. Oh yeah, it's a passion project for Gary Keller and Jay Papasan. I'll work on it. I'll get to it whenever they perfect it. So I really think it's a non-conversation, or it's a non-issue short conversation for most people. And then if you are in one of those market areas where they're using it, again, just have a conversation of, feels like that's more important to you than the relationship that we've built, or, feels like getting your client some type of discount is the most important thing in the transaction. Where I think we're all going to be able to back people into a corner, and I hate to say it that way, but it's the truth, is, hey, Mr. and Mrs. Keller Williams agent, Gary Keller created this discount mortgage company as a solution to try to keep clients away from discount real estate companies. So Gary Keller, Keller Williams, most agents accept the fact that like what they do is particularly special and adds more value at 3% per side of transaction versus Purple Brick or Purple Dot or whatever discount brokerage is popping up online. You accept the fact that there's value in what you do over what the discount online, real estate brokerages do. Would it be crazy to think that there's value in what I do as the fully paid loan officer versus the discounted call center loan officer? Would it be crazy to think that maybe there's some value in that $1,500 origination charge that we charge to have, more seasoned, higher paid people working on your file? I think that's a super easy conversation to have and get somebody thinking about like, oh yeah, I would never charge less than 3%. Why would I expect the people that are making sure whether or not my deal closes to be willing to work for $500? Because I'm not. I'll go sell cell phones. Right.
So, part of that, like you said, it starts with understanding what your value is, and your value proposition as an LO. I mean, what is it? Is it access? Is it communication? Is it your partnership with the agent? Is it the fact that your boots on the ground? Is it that you have a package value where you and the agent have worked together for a long time? Is it that the local market? I mean, for me, I talk to my agent partners a lot about the fact that I use social media and I'm constantly posting in real estate agent groups, not necessarily because I want to work with every realtor, but I want all the local realtors to know who I am, so that if one of my clients is buying one of their listings, they're familiar with me, and hopefully I've got a good chance of helping them move to the top of the pile. That's not going to happen in a call center.
Yeah.
So, that's the kind of conversations that we need to have with our agents. And certainly some of us are spending a lot of time and energy. I know you've been doing that in your group, and maybe you watch TJ and I a little bit, talking about the partnership of helping generate leads and using your database to pull more out of it, more contacts, more opportunities. So is a call center going to spend time calling their past clients and sending them back to the agents that originally sent them to them? Mm-hmm. I mean, there's a whole list of things that you can put together when you're meeting with these agents. And I think just that exercise alone outside of Keller Williams is an important exercise.
Yeah, I love your point you make about helping to get the offer accepted because, yeah, the discounts are great, the no origination fees are this, but like we can't lose sight of the fact that you are shopping for a home, you are applying for a loan. You're shopping for a home, you're applying for a loan. Like just because you can easily apply many places and there's a discount involved with some of them, doesn't mean you're actually approved. And it sure as hell doesn't mean you're actually going to have somebody going to bat for you to try to get your offer accepted. So to your point, I'm going to get some rare form of cancer from the amount of iced tea that I drink. But everybody in our market area, even the agents who are never going to work with me or they're only listing agents or they don't like me, they know that Scott's like the iced tea guy because I'm constantly taking agents out talking, over iced tea, talking about what we do different, how we help deals get closed, how we're going to bat for our clients for exactly what you said. Like we want to be the local area experts that help get the deal accepted because without that, we're all just spinning our wheels. So I think adding value in that way, you're just going to stand out above and beyond a call center. And then, I'm going to say something pretty vulgar and I'm going to say something pretty vulgar and pretty controversial. There's a lot of loan officers out there that I think are scared about this because they pay for business. And whether or not they pay for business in the unethical, there's an envelope going out, or they pay for business in the sense that like the only way they can get leads is by co-branding and paying $1,000 a month to an agent's, bottom line. But the truth is, like, I think they're scared because they know, if you act like a whore, you're going to get treated like a whore. And if the only way that you can attract business is by paying for it, well, guess what? Someone's going to come along that's a big boy company like Keller Williams Mortgage, and they're going to have a higher price to pay for it in the sense of lower fees, lower rates, discounts, whatnot. I can't afford to co-brand with somebody at $10,000 per file. If Keller Williams can lose $10,000 per file by paying the origination fee and giving them a lower rate and waiving this commission and waiving that, well, then they're always going to win the big money game. So if you're a loan officer who's out there and the only way you can attract business and add value is through your wallet, then, you act like a whore, you get treated like a whore, and eventually somebody's going to have a better price. And that's effectively what Keller Williams is doing. And that's why I'm kind of excited about it, because the 50% of agents or loan officers, the 50% of loan officers that are just paying to play and they're not really core competent, they're not adding value, and they're not doing the number of transactions it takes to stay alive in this business, great, man, get rid of them. And then you and I and the people that are, focused on honing their craft will get the lion's share of what's left over. Like, I'm okay with it.
I like how you point out that so many of the loan officers just, again, turn it into the commodity based, and their only true value is really just taking the 1003. And that we mentioned movement earlier, and we certainly respect what they did with the Keller Williams offices. Keep in mind, though, it wasn't just money. It was money, like you said, plus the process, which you mentioned earlier, of having a pre-underwritten file. So they were bringing more value than the other folks who had offered to partner with Keller Williams in that, okay, yes, we have money, but we also are going to make sure that your agents close their deals smoothly. As to whether they pull it off or not, that's a different story. But at the end of the day, their value proposition was more than just money. So, and that's the lesson that we all need to learn. We need to have a value proposition that's more than money. And, I think it's important to understand, too, that with the Keller Williams agents, it's an opt-in or an opt-out. Now, as we get to know them and talk to them, some of them send us a lot of business. They need to at least understand that they're going to be faced with that decision at some point as to whether they're opting in and opting out. If they're opting in, I don't know, where you're at, when you and I might disagree on this, but if they're opting in, I'm going to have a really hard time doing anything with them from a marketing perspective that costs me a penny or, takes any amount of my time other than working with a customer they send me. Because if they're opting in, they're putting the disclosures in there and they're putting it in front of every client. And it's just, to me, that's a difficult decision to make, because I know a couple folks in my particular market have already seen cases where agents that have opted in are putting it in their disclosures on the listing side. And, I've got an LO who sends a deal to a non-Keller Williams agent and almost loses the client because a Keller person sticks that disclosure in the seller's disclosures. Now, it doesn't seem real to us all because, like you said, it's not in every market. But if it comes to your market and that particular office is acting like that, can you support them? Can you send deals that way? I mean, I personally don't think I can. I really, to me, you guys are doing whatever you can to take money out of our pocket.
Yeah, I think it's going to come down to more of a preemptive strike. And Michael, I don't know the answer to this question. Are you an escrow state or a title state? Like, how do you close your transactions?
Yeah, we are wet funded title state. Yeah.
Okay, and then the good faith deposit, do they have to wire or can they still use a personal check where you're at?
They do both, but it's a combination. It
Got
just
it.
has to be turned in within a day typically if it's a check.
Got it. So if you're in Southern California, you've been dealing with some version of this Keller Williams disclosure for your entire career, whereas in California, we're an escrow state. Escrow companies will 99% of the time only accept wires. And so, a lot of these steering lawsuits and fake accounts and all this stuff and the tellers getting really aggressive that lead to these large fines for these large banks comes from this scenario. I've worked with a client for 6 months. They walk into, Bank of the United States and they say, hey, I got to wire money to escrow. The teller is compensated to make that referral to the mortgage person. So then what happens all the time is as they're there making their good faith deposit wire, they get picked off, they get walked over to the loan officer. The loan officer there in, Bank of America, Wells Fargo, Chase City knows the good players in town and says, hey, I see you have a pre-approval here from New American Funding or Movement Mortgage or Prime or Guild or one of the other good mortgage bankers. I'm sure they're really great and they've done a great job for you, but since you're a bank client, we can get you an eighth or a quarter lower. And it happens all the time, constantly fighting that battle. And that's just something you have to deal with if you're a loan officer in California. So, we worked it into our sales pitch and our opening checklist a long time ago that we have to have a preemptive strike against the teller and explain to them what they're trying to do, the fact that they're being compensated for a referral, all of the ways that, things can go bad if they start over with a new lender at a large bank on day one of the transaction. We've had to work that into our game and up our skill set. I think what we're going to have to do in big areas where, Keller Williams, you're either getting a lot of deals on the buy side or a lot of listing agents that control market share are Keller Williams agents. You're just going to have to do a preemptive strike and say, look, this is what's going to happen at the moment of truth when you sign the contract. You're going to get this disclosure and you're going to be tempted to go with this in-house and you're going to be tempted to do this. And my conversation would just be like, look, if you're using, a Keller Williams agent on the buy side and a Keller Williams agent on the listing side and a Keller Williams agent preferred title rep and a Keller Williams preferred loan officer, who's looking out for you, Mr. and Mrs. Client? Because maybe they're all good, very ethical people, but they're all sleeping in the same bed at the end of the night. And I want a little bit of separation in church and state. I use the same comments when a client tries to walk into a open house and the listing agent says, well, just write the offer with me as the buyer's agent and use my lender and use my inspector. I just tell the client that's great. That agent may or may not know how to ethically double-end a transaction, but who's looking out for you if you dump me as the lender? So I think we're just going to have a lot of preemptive conversations, and I'm in no way ready to give up on any of my Keller Williams referral sources because they're great people, and I think we have a good relationship. But I get your point, like, where do you want to put your money, right? And where do you vote with your wallet if you're generating your own leads, like I know you and your boot camps work on doing?
Yeah, well, it's again, that preemptive conversation applies to so many things that we do as a lender. I mean, you mentioned boot camp. I watch people all the time talk about their EPOs on VA loans because of some of the churning that goes on. And we literally had this conversation last night in one of our groups. We're talking about, somebody who just got stung for EPO that was almost more than the company made in the first place. And the first question we always ask is, well, did you talk to that veteran before closing to explain all the mail they're going to get and all the,
Right.
All the offers that would look like they were a better deal. So like you said, it's the same thing. It's Mr. Client, you're most likely going to be out there shopping on the market, and there's some Keller Williams agents out in our market, and they have this disclosure, and I'm going to explain what it looks like and what you may see if you decide to write an offer on a Keller Williams home. So if nothing else, the last 45 minutes, I just realize every time I have a client that I pre-approve, I need to talk to them about Keller Mortgage, and then I need to explain to them the difference between full service and discount. And I need to explain to them how, saving 10,000 sometimes will give them a much higher rate over time. to perhaps preemptively position myself so that they at least come back to me when they see those disclosures, if they are in my market. And I'm hearing rumors today, I got buyers 30 miles west of me, one of the bigger Keller Williams offices, putting them in their listing package. So I know already somebody shopping in that side of town, I might have to have that conversation preemptively with them.
Yeah. And you know what's great about the job that we do is we have all the ammunition we need to have these conversations from the pre-approval. So, this is something I haven't done in a long time because I'm now seasoned enough in my career to be able to have these conversations on the fly. But back when I was really struggling for each deal, especially post 2009, and I knew everybody out there was discounting everything because they needed a deal to keep the doors open, I would look through their bank statement. And, if they went to Intelligentsia Coffee instead of 7-Eleven, I would bring that up as an example, not telling them that I trolled their bank statements. Or, if they went to Arroyo Chop House instead of Applebee's, I would bring that up. And I would just say, hey, I like getting a steak at Arroyo Chop House, which is $50 instead of Applebee's, which is $12, because it's a different grade. It's a different service. There's, a different caliber of people in that restaurant who I network with. And you can, on almost every bank statement, find an example of where a client is willing to quote unquote overpay, which is really just paying for service and the experience. And you can bring that up in your conversation. Like, hey, as soon as you start making offers, talking to agents, putting the word mortgage in your Gmail, you are going to get bombarded by discount shops. But hey, there's a reason I buy Levi's instead of the Walmart brand or whatever the case it may be. In somebody's bank statement, you can find somewhere where they spend a premium for a better quality product. Why not use that to your advantage when you're trying to explain the difference between us, Scott and Michael, and, the call center who's maybe do a great job? Because like I said, that's probably where 50% of the industry is going. But on those more complicated deals, probably not. So I think it's just the way the business is going. I think we're all going to be okay.
I agree. If you watch that hangout we did with Barry, he had some great ideas on that earlier today. The advisor position is what he always calls it, and positioning yourself as that person who's really got your eye on them from the advisor perspective. Yes, we know you're trying to save $4 a week, but at the end of the day, the cost of you waiting and the cost of you not getting into a house is going to cost you way more than that $4 a week. I mean, heck, if my skills can help you get into a house now instead of waiting 6 months, based on where the market's at, that might save you $4,000, $5,000, $6,000. That's way more than the $20 a month that I'm saving you over the next 5 years. That's substantial. So, if I can help you, just like a real estate agent, if I can help you save $6,000, would it be worth paying me an additional $20 a month or an additional $1,000 of closing fees?
Mm-hmm. I love that. I'm going to use that because in our market, it could mean $40,000 or $50,000 the way properties are going. I got clients who've been pre-approved for a year, and they're just
go watch the hangout we just did with Barry. Part of the reason I was a little bit late here, but I was blown away by the things that we're not doing as loan officers. We're not showing these folks how much money they're wasting by waiting, and they're sitting there trying to save an eighth in rate. Meanwhile, I've seen it in my market. I got a guy right now who has wasted 2 years because he's always underbidding. And this guy's wasted $150,000 in equity and all this kind of stuff. And I can calculate it just like Barry was doing on the hangout. And, he's nickel and diming everybody trying to save an eighth on rate. And at the end of the day, it's costing him $200,000. It's crazy. So
yeah, insane. It's interesting. I had the pleasure of meeting Jay Papazon. Jay Papazon is actually the ghostwriter, well, not the ghostwriter, the co-writer for Gary Keller. He helped him write The One Thing, The Millionaire Real Estate Agent. Jay is a really fascinating guy, classically trained journalist, writer, probably reads some portion of 1,000 books a year. Very, very intelligent guy. And he's kind of, that right-hand man to Gary. I don't know what his technical position is, but he's way, way up there in the C-level conversations. And I got the pleasure of talking with him for a couple hours at a mastermind group that I was part of. And he was there to talk about books and kind of building a brand, but we ended up going pretty deep into the business conversation. And where I will give Keller Williams credit is they are thinking a year out, 5 years out, 10 years out. And when I asked Jay and I said, hey, what's the biggest thing that keeps you and Gary up at night? Like on a structural, the company could fail tomorrow. What's the thing that keeps you up at night? And he was very honest with us and he said commercial leases. And he said, Gary Keller probably has on the top of his head a deeper understanding of the individual commercial leases that Keller Williams is holding, unlike anything I've ever seen. Like, he probably has in his head expiration dates, cost per square foot of 1,000 different market centers across the United States, because he's very worried that more and more is going to be on Zoom. It's going to be digital. It's going to be, everything's going to be a standalone little hub in your home. And the fact that, like, they have some of these market centers that can house 100, 200, 300 people, he's like, we don't want the business to shift away from where it is now, and we're stuck with 100 million square feet of commercial space that we're paying for and nobody's there. So I tell you this because I think maybe some of this mortgage stuff, maybe some of the stuff Gary Keller's doing, maybe some of the aggressive conversation he had from the stage is stuff that he envisions working out on a global scale in 2 years, 5 years, 10 years, just like these commercial leases are going to renew in 2 years, 5 years, 10 years. Like, he's thinking about a company that will last 100 years, 200 years, until America fails. We're thinking about his comments of, oh my God, it's happening today. So, just to bring some perspective to it, I would maybe all of us take a step back, calm tempers a little bit, double down on the relationship building with our clients, do the right things, and then I don't care who puts what disclosure in front of anybody, the good loan officers are going to figure it out.
Yeah, I do agree with that. The one thing that I have a hard time letting go of is that he's really trying to mobilize his agents to be mortgage sales folks.
Right.
And, I know we as lenders do the same thing. I mean, we try to get our agents to send them to us. So if you think about it, I don't know how many Keller Williams in America. It's globally 170, 180,000, whatever. When you write it down on paper, it looks like a lot of people. But at the end of the day, what are they doing? They're sending this to a call center of 20 LOs. I mean, you and I know branch managers that have more loan officers than that.
Yeah, not scalable.
Right, it's not scalable. So,
it's interesting because I think in that vein that it's going to affect a very certain segment of the market, and this very might will be geographical hubris. I think in Southern California, my business partner and I, Justin, we've built a niche where it's like we deal with those entertainment borrowers, self-employed borrowers, the tough deals, the hard to structure deals, the, call them newly rich, the writer who is writing jokes for $15,000 a year and now they're a writer on Arrested Development or whatever the new comedy TV show is. They're making a couple $100,000 a year, and that's their trajectory. So I just know a call center is never going to be able to put together that deal. So maybe I'm a little bit less concerned than the loan officer who has a very valid concern if a vast majority of their business is one W-2, one pay stub, you've got a military spouse and you've got a wife who's a dental hygienist, and yeah, they could do a call center and have a phenomenal experience. And companies that you and I have both worked for or work for have call center components to them. So, that's a reality of where the business is going, and I think we have to be cognizant of it. And if you've got to recreate yourself right now into another niche, for you guys, it's veterans, maybe it's for self-employed borrowers, maybe it's for the more challenging deals, be giving that some thought, because there is a call center that's going to come along that's going to eat your lunch, and they're going to figure it out digitally if a vast majority of your clients are one pay stub, one W-2, decent credit.
Yeah, you got to be the best at something. So, whatever your role is, stand out, be the best. I like it, man. I like it.
Yeah.
So cool, man. Well, we've eaten up a good 35, 40 minutes of our folks' time. I got a whole lot of well said, Scott. Well said, Scott. I don't see a whole lot of well said Fish. So that's good. That's good.
That's why you have guests, right? And then I'm gonna have you on as a guest to talk about what you're doing.
But yeah, I think at the end of the day, we want to encourage the dialogue, and I don't necessarily want anybody to go burn down the house that they've built with Keller Williams agents. But heck, I mean, you got to at least pay attention to what's going on, and hopefully, if nothing else, this is a sign to you that you need to diverge a little bit and not rely on perhaps any one officer or any one agent too much. So,
Yeah, I'll be real interested to see. I have some close friends that work in-house at Keller Williams offices. Again, if I was running an entity where I was adding a ton of value to Keller Williams and I was stroking him a check and I was a partner, I would just be offended. Like, I don't work in-house at a Keller Williams anymore, which I used to for a couple of years. That would just piss me off a lot more. But the one-off deals and the one-off weirdness, I don't really care. So yeah, maybe we can do another one of these and talk about something more near and dear to your heart. VA loans. We'll get Cole to come on. We can do some point counterpoint with you and Cole arguing about VA loans or something, and I'll moderate. But yeah, we should definitely do this again.
Cool. I dig it, dude. Well, peace out, brother.
All right, man. I'll talk to you
I
soon.
will talk to you guys soon, and
the
the invitation still stands. I'm going to be in San Diego in a few weeks, about 18th and 19th, if you guys can make it. So.
I might drive down there to hang out for a night. I've got so many little mini trips planned. Justin's going to kill me if I take another 2 or 3 days off for training. But I might drive down there for a day and buy a drink.
Cool. Let us know, man. All
right,
Talk
dude.
to you guys soon.
Talk to you guys soon.